morning, everyone. Welcome to the market opening bell for Wednesday, December 10th, your 10-minute guide to the stock market. With the market awaiting the Federal Reserve's interest rate decision, Hong Kong stocks opened higher but closed sharply lower. The Hang Seng Index opened 16 points up, reached an early high of 25,820, then steadily retreated, hitting an intraday low of 25,387 and falling as much as 322 points before closing at 25,434, down 331 points or 1.3%. The H-share index dropped 147 points or 1.6% to 8,936, while the Hang Seng Tech Index fell 108 points or 1.9% to 5,555. Total market turnover was HK dollar 210.2 billion. Southbound Stock Connect recorded a net inflow of HK dollar 531 million into Hong Kong stocks. Among the major flows, net buying was seen in Tencent Holdings, HK dollar 877 million, Xiaomi Corp W, HK dollar 539 million, Alibaba W, HK dollar 425 million, Agricultural Bank of China, HK dollar 306 million, Hua Hong Semiconductor, HK dollar 250 million, and Innovent Biologics, HK dollar 179 million. Net selling focused on PopMart, HK dollar 574 million, and SMIC HK dollar 118 million. Notably, Southbound funds have now bought Xiaomi for 8 consecutive days, with a cumulative total of HK dollar 6.778 billion. Technically, the Hang Seng Index closed below its 100-day moving average 25,843 for the second straight day and broke below last week's low of 25,649. The next key support level lies around 25,150. Mainland Chinese stocks were mixed after a lower open. The Shanghai Composite closed down 14 points or 0.4% at 3,909. The Shenzhen Component Index fell 52 points or 0.4% to 13,277, while the Chinix Index rose 19 points or 0.6% to 3,209. Total turnover on the Shanghai and Shenzhen exchanges reached RMB 1.9012 trillion. The RMB central parity rate against the USD was lowered by 9 pips to 7.0773 US. President Trump announced that the United States will allow Nvidia to export its H200 AI chips to China on the condition that the US government receives 25% of the sales revenue. SMIC and Hua Hong Semiconductor, which had risen strongly on Monday, gave back some gains yesterday. This approval is a major positive for Nvidia. China previously accounted for roughly 25% of Nvidia's global AI chip sales, but export restrictions since 2022 had cost the company billions in revenue. The resumption of H200 exports would directly restore that business, with analysts estimating that the China market could contribute US dollar 5 to 10 billion in revenue in 2026 alone, reducing Nvidia's reliance on US and European data centers. Although the 25% government cut will squeeze gross margins from around 70% to roughly 50%, the overall revenue boost will far outweigh that impact, especially as the H200's advanced memory and performance perfectly meet China's AI training needs. In the long run, this move strengthens Nvidia's global AI leadership and is expected to boost its 2026 earnings per share by 10–15%. For SMIC, China's largest foundry, focusing on 7 nanometers and more advanced nodes, the news is a direct headwind. The company has been aggressively developing domestic AI chips, such as Huawei's Ascend series, to fill the Nvidia void. With high-end Nvidia chips now readily available again, Chinese firms like Baidu and Alibaba Cloud are likely to reduce reliance on SMIC's domestic alternatives, slowing the growth of its advanced node orders and affecting its original 20% revenue growth forecast for 2026. Over the medium term, if US-China trade tensions continue to ease, SMIC may pivot more toward mature nodes in automotive and consumer electronics. Its national security status still enjoys strong policy support, but intensified competition will test the speed of its technology upgrades. Hua Hong Semiconductor, which specializes in power, analog, and RF chips on 890 nanometers processes, is not a direct AI GPU competitor, but its business is still heavily influenced by the broader Chinese semiconductor ecosystem. Easier access to advanced Nvidia chips will reduce the urgency across the entire domestic supply chain, potentially lowering demand for Hua Hong's analog and power management chips used in AI servers as the Nvidia ecosystem regains ground. The company is also expanding its embedded flash memory offerings, but the ready availability of high-end AI GPUs will slow that market penetration. Over the longer term, Hua Hong's core markets in IoT and 5G remain relatively solid. According to domestic media reports, Alibaba has established a new Quen consumer business group by merging its former intelligent information and intelligent connectivity divisions. The new group includes the Quen app, Quark, AI hardware, UC browser, and Shuqi, among others. In internal communications, Alibaba stated that the primary goal is to turn Quen into a super app and the first entry point for users in the AI era, eventually evolving it into an omnipresent AI assistant that spans glasses, PCs, vehicles, and more scenarios. New listing Bao Pharmaceuticals B02659 closed at HK $56.5 inches. The gray market on Philip Mart yesterday, a premium of 114.2% or HK $30.12 above its IPO price. Excluding handling fees, a board lot of 100 shares delivered a paper profit of HK $3,012. As the market awaits the Fed's decision, US stocks traded in a narrow range on Tuesday. The VIX fear gauge rose 0.3 points or 1.6% to 16.9. The S&P 500 dipped 6 points to 6,840. The Dow fell 179 points or 0.4% to 47,560, while the Nasdaq was the only major index to close higher, up 30 points or 0.1% to 23,576. Expectations of a rate cut favored smaller companies, pushing the Russell 2000 to a fresh intraday record, closing up 0.2%. The Nasdaq Golden Dragon China Index, tracking Chinese ADRs, dropped 107 points, or 1.4% to 7,730. JP Morgan said it expects to spend US $105 billion next year, above market forecast, and its shares closed 4.7% lower, weighing on the Dow. Among tech names, Nvidia edged down 0.3%. Google parent Alphabet rose 1% on news that it plans to launch its first AI smart glasses next year, while Meta, which previously collaborated with Ray-Ban on smart glasses, fell 1.5%. CVS Health gained 2.2% after issuing better than expected profit guidance for next year. Home Depot slipped 1.3% as its earnings growth outlook disappointed. The U.S. Labor Department's jobs report showed October job openings rose to 7.67 million, a 5-month high and well above the expected 7.15 million. Meanwhile, ADP data indicated U.S. private employers added an average of 4,750 jobs per week in the 4 weeks ending November 22, suggesting the labor market may be rebounding after 4 straight weeks of declines. The NFIB Small Business Optimism Index rose 0.8 points to 99 inches November, remaining above its 52-year average of 98. Spot silver in New York hit a fresh all-time high of US $60.8305 intraday, while COMEX silver futures reached a record US $61.295. Our stock pick today is Horizon Robotics 9660. Amid the industry trend of democratizing intelligent driving and continuously rising consumer recognition of mid to high-end advanced driver assistance systems, ADAS, Horizon Robotics shipped 1.98 million units of automotive-grade processing hardware in the first half of 2025, achieving year-on-year doubling in shipment volume. Of these, hardware supporting highway navigation assistance functions, NOA Highway Assist, reached 980,000 units, accounting for 49.5% of total shipments and representing 6 times the volume of the same period last year. This surge was primarily driven by the new generation Journey 6 series products, which became the main growth engine of the business. Thanks to the doubled shipment volume, the group continues to rank No. 1-inch market share among Chinese automakers for both basic ADAS solutions, 45.8%, and overall ADAS solutions, 32.4%. As of 30 June 2025, the group has cumulatively secured nearly 400 new model nominations, including over 100 nominations with highway no functions and above. In the first half of the year, more than 15 vehicle models equipped with the group's mid to high-end ADAS solutions successfully entered mass production. Overseas expansion has yielded initial success. Through close cooperation with global partners and the new generation basic ADAS solution Horizon Mono, built on the Journey 6B chip, the group has won design wins from 2 Japanese OEMs for models sold outside China, expected to bring more than 7.5 million units of lifetime shipments. In addition, 9 Sino-foreign joint venture car makers in China, including Volkswagen and Japan's largest automotive group, are upgrading the ADAS functions of their existing models. A total of 30 models from these JVs have selected Horizon solutions, with some scheduled to start mass production from the end of 2025. This demonstrates that, following the cooperation with the Volkswagen Group, Horizon has further successfully expanded the international layout of its products and enhanced its global brand influence. In the first half of 2025, the group recorded revenue of RMB 1.566 billion, representing year-on-year growth of 67.6%, with a gross margin of 65.4%. The transition to mid to high-end ADAS solution will become the dominant trend in the next stage of the industry, and demand for advanced algorithms, software, and related cloud services is growing rapidly. The group is pushing forward the development of the full scenario urban NOA solution, Horizon SuperDrive HSD, which aims to handle more complex driving scenarios, deliver human-like driving experience, and achieve seamless nationwide deployment. HSD has already secured design wins from multiple OEMs covering more than 10 vehicle models and is planned for mass production in the second half of 2025. The group believes HSD will become the technical foundation for future robotaxi autonomous ride-hailing services. Recommendation: buy at HK $8.5, target price HK $9.4, stop loss HK $8. 1. I do not hold the above stock.